Your mortgage payment just went up $200 a month and your rate never changed, not 1 basis point. If that happened to you, you are not crazy. And your lender did not trick you. Something else moved. And in the next few minutes, I will show you exactly what it was, why it is hitting Illinois homeowners harder than almost anyone in the country right now, and the 4 moves that can bring that payment back down. My name is Eric Hamilton. I'm the Senior Vice President of Mortgage Lending at Rate, and I've spent more than 20 years helping buyers and homeowners across Chicago and Illinois. And this question is filling my inbox right now. Why did my payment go up if I have a fixed rate? And here is the answer. Your mortgage payment is not one number. It is 4 numbers stacked together. Think of it like a pizza with 4 slices. Slice 1 is the principal. That is the loan itself. Slice 2 is the interest. That is the cost of borrowing. Those 2 slices are your fixed rate. They are locked. They did not move. They will not move. But there are 2 more slices. Slice 3 is your property taxes. Slice 4 is your homeowner's insurance. Those 2 slices are not fixed. They never were. In Illinois, they are growing fast. So how do taxes and insurance end up inside your mortgage payment? Through something called an escrow account. Here's the simple version. Your lender keeps a jar with your name on it. Every month, a piece of your payment goes into that jar. When your tax bill comes due, the lender empties the jar and pays it for you. When your insurance renewal comes due, same thing. You never miss a bill. That is the whole point of an escrow. But here is the catch. The lender has to guess how much to put in the jar. That guess is based on your last tax bill and your last insurance bill. If the real bill comes in higher than the guess, the jar runs out of money. That is called an escrow shortage. And that is what just happened to hundreds of thousands of homeowners across Illinois. Let me show you why. Let's start with property taxes. In 2025, the average Cook County homeowner saw their second installment tax bill jump about 16%. Some neighborhoods saw far more than that. And this is not just a Cook County story. Every county in Illinois reassesses home values on its own schedule. Cook County reassesses 1/3 of the country or 1/30 of the county every year on a rotating 3-year cycle. In 2026, it is the south and the west suburbs. The city of Chicago is next in 2027. Counties like DuPage, Will, Lake, Kane, and McHenry update values on their own cycles too. When your home gets a new higher value, your tax bill usually follows. And here is the delay that catches people. The new value does not hit your bill right away. It shows up the following year. So the notice that you shrug at today becomes the payment jump that you feel next year. Now let's talk about and add insurance. Illinois homeowners insurance cost rose about 50% from 2021 to 2024. That is one of the biggest jumps in the entire country, according to Consumer Federation American study. The largest insurer in the state raised Illinois homeowner rates 27% in 2025. The second largest raised rates again in early 2026. Hail, storms, and rebuilding costs are driving it. You did not file a claim, your rate went up anyways. So your jar had 2 bills land on it that were both bigger than what the guess was up front. Here's the part that nobody warned you about. Once a year, your lender does an escrow analysis. They compare what went into the jar and what came out. If the jar came up short, 2 things are going to happen at the same time. First, you have to pay back the shortage. Most lenders spread it over the next 12 months. Second, the lender raises your monthly deposit going forward because the bills are bigger now. That is the double hit. Let me put real numbers on it. These numbers are an illustration, but they match what I'm seeing day to day. Say your taxes went up $900 a year and your insurance went up $300. That is $1,200 more per year. Divide by 12 and your monthly deposit rises $100. Now let's say your jar also came up $1,200 short last year because of those same increases. Spread over 12 months, that's another $100 a month. 100 plus 100 is $200 jump in your payment. Your principal and interest never moved. Your payment did. The good news is the shortage price falls off after 12 months. The better news is you have more control here than you think. Here are the 4 moves. Move 1, Read your escrow analysis statement. Do not throw it away. It shows the exact tax and insurance numbers your lender used. If a number looks wrong, call your servicer and ask immediately. Move number 2, check your exemptions. In Cook County, the homeowner exemption alone removes $10,000 from your equalized assessed value. There are more for seniors and for veterans. Millions of dollars in exemptions go unclaimed every year. Every county has its own exemption list. Check yours where you live. Move number 3, appeal your assessment. In Cook County, you get 2 separate windows, one with the assessor and one with the Board of Review. Filing is free. Even the assessor tells homeowners to appeal. A lower value this year protects your bills for the rest of that cycle. And move number 4, shop your insurance at renewal. Get 2 or 3 quotes. Ask about a higher deductible. Then send the new policy to your servicer so your escrow math updates. One more thing on the shortage itself. You can usually pay it as a lump sum instead of spreading it out. That kills a temporary $100 immediately. Only do that if the cash does not strain you. Now, if you have not bought yet, the next part is for you. The listing shows last year's tax bill. That number can be a trap. It might reflect the seller's senior exemption, which you will not get. On new construction, the first bill is often based on the empty land, not the finished home. Then the county catches up and the real bill lands. If your escrow account was set up on the low number, a shortage in year 2 is nearly guaranteed. So before you offer, ask this one question. What will the taxes be for me, not what they were for the seller? A good lender runs that math before you sign anything. That is what I do on every pre-approval. We build your payment on the real numbers so year 2 does not ambush you. And here is the bottom line. A fixed rate protects 2 slices of your payment. Taxes and insurance were never locked in. But you are not powerless. Read the statement, claim the exemptions, appeal the value, and shop the policy. If you want the payment on your next home built on real numbers from day one, start at my website, 100homebuyers.com. The link is in the description. If someone you know just opened a Sari escrow letter, share the video with them. It will save them a panicked phone call. And drop a comment. Tell me how much your payment jumped. I read every single comment. See you on the next video.